Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
All right, want to welcome everyone to another episode of Kiss My Assets. And I'm Jamison Manwaring, CEO of Neighborhood Ventures, and I'm excited to have Heather Andrews in Investor Relations join us. Hey, Heather.
Hi. Happy to be here.
Thanks for joining us. And Bart Diehl.
Howdy.
Hey, Bart.
Happy as well to be on here.
We bring these folks on because they have such great insights into what's happening in Arizona and more broadly with multifamily. So it's exciting to have a good group of folks here to discuss some of the things that are happening. I want to start it off by saying we're recording this on the 12th of July. The inflation numbers just came out and they came out pretty positive. We're down to 3% inflation growth from a year ago. And for most of us who have followed this more closely over this last year, that's the lowest that we've had in about 14 months on a year-on-year number with our cost, our CPI index.
It's good news.
Yes, it's great news. The target rate's
Good job, Jerome Powell.
So we're getting closer. A year ago, we were at 9% inflation. So we're getting closer to that target of 2%. So that's really positive news this morning that just came out. You like Jerome Powell right now then, Heather?
I do. We're going to have a little Jerome Powell party at some point.
Well, there's a lot of debate about the way they've handled things, but it is good to see the overall number moving down. And now we have to see that for a period of time, I think, before the Fed will ever lower rates. They want to see that sustained, but it's good to see it. We're approaching that 2% target, and that just came out. And now I want to jump into some of the more topical items that we have been seeing over the past couple of weeks when it comes to multifamily, when it comes to housing. And the first one I want to share is this Wall Street Journal article that came out about Portland. And this article is looking at the census numbers, and Portland is seeing a migration away from Portland, and the city itself lost 3% of its population in a 2-year period from 2020 to 2022. So this is one of those standout cities that has seen a migration away from the city. And the article digs into a lot of the reasons why. I myself haven't been to Portland for a while, but I have some friends who live there. And there is definitely the issue in Portland of a feeling where it's not as safe as it used to be. It used to kind of be this large city that felt like a small town. And now it's feeling more like it has big city problems, even though it's still this small town. A lot of homelessness, a lot of crime in the streets, a feeling of being unsafe there. And that's what the Wall Street Journal article is pointing to as to why there's been such this migration away from Portland. And as you look at what's happening, and we're going to talk a bit more about where these people are moving to, but it's a really interesting case study because this city was always this kind of cute quintessential town, and it's really changed over the last couple of years.
I remember going I was in my early 20s, and it was like a very cool place. Everyone was very much themselves. I felt a little similar to Flagstaff, but it's definitely changed.
650,000 people. So it's a good sized town, but it's not huge, right?
Yeah, that's just like where I live in North Phoenix. That's nothing compared to what to us here. Yeah,
it seems like a lot of cities in that area. So you have like Portland, Seattle, and obviously San Francisco are bigger than Portland. But the theme is unsafe, unsanitary, unaffordable. So, I mean, if you're going to pay, it costs way more to live there.
Yeah.
So if you're going to be paying that much, you obviously want to be able to walk around your city, and not be stepping in feces and, not be worried about crime happening around you.
Yeah.
It feels anti-small business in a lot of ways, but I completely get why people are migrating away from those types of cities.
Well, I just think that's an interesting big city problems in a small town. If you're
Yeah.
living there, it's for that small town kind of experience, and it's why you moved away from a big city. And so they're going to move again. And 3% to me, when I hear that, I think that seems so little, but that's actually pretty significant, right? 3%
Yeah, no,
is a
that's a
big
big
jump.
deal
Yeah.
when you see that sort of migration out of a city, because the population is increasing in the US, 3 to 4% in general. So they're really losing more like 6 or 7% compared to the growth of what it should be. And one of the things the article also pointed out is this was the catalyst behind this had some to do with the George Floyd problems that happened in Minnesota and then those protests across the country. And Portland was one of the areas where those protests was the most prevalent. And we saw this across many cities across the country, but a lot of them have now recovered. But at that time, we saw a lot of stores got boarded up, even in Phoenix and Scottsdale. There were some looters in Scottsdale Fashion Square, but those things seem to be something of the past in most cities. In Portland, there are still boarded up storefronts downtown. There's still encampments, large encampments with RVs. And so they haven't really recovered the way that a lot of the other cities have. One of the quotes here is from someone who used to be a big promoter of Portland. And he says, I've always been a big booster of Portland, but I can't recommend it right now. It's too expensive for what it is. And so to your point, Bart, one thing to go in there and get a deal, but it's actually really still expensive to live there. And then they're not getting the quality of life that they want.
And I think that's a big trend with people they're willing to spend the money, they'll pay the higher rents, but they want the amenities and the experience that comes with it. The neighborhood is the amenity. That's the thing John says that I love. If the neighborhood isn't there, if the amenities around them are not for what they're paying, then they're not going to stay. They have options.
And so then that question becomes, well, where are these people going? And
Here.
census data that came out, that's definitely one of the places that they're going is to the South. But let's look at this data. So this is a report that came out from Axios, and they're analyzing the census data as well over the last 10 years. And I love infographics like this. So let's just dig into this a little bit. So the colors make it really easy. The dark orange, there's 20% change and 20% declines in national GDP from these areas. So we're looking at a few Midwest areas. We're looking at Wyoming as a little bit of an outlier in the West, but most of this is in the Northeast and concentrated there. Then you get to the lighter orange and it's a bit more flat. And then you see the purple and the darker purple. That's where you're seeing the big growth. And those tend to be in the South and in the Mountain West, Utah, Colorado, Idaho, Texas, in the South. And what this indicates is that as times change and as time passes, growth never stays the same. Either these economies are growing and moving up and to the right, or they're declining. You really can't just say we're just going to rest on our laurels and everything's going to be fine, because that's not how things work. And these areas really identify the areas where you want to invest when it comes to housing.
Well, it's just it just shows the path right down. It looks like, when people were going from east to west for the gold rush and we're just having it go all
the way back to the gold rush.
All the way back down to,
Yeah, I something I read in the article that was really cool was of the 9 fastest growing cities in the South, 6 were in Texas. And it doesn't say this in the article, but the reason is, there's a contrast to places like Portland, Seattle, San Francisco, like I mentioned. In Texas, there's no state income tax. It has very pro business policies, and the cost of living is substantially lower than those areas. So if you're considering, your hard-earned dollar where you're going to live, Texas, lots of those cities in Texas, Phoenix, Arizona, it makes sense to move there.
Yep. More for your money, more
You're
space.
pointing at, Bart, is the cities now themselves that have the largest numeric increase in population over the last year. So Arizona ends up getting about 100,000 new people. Phoenix area, about 100,000 new people a year by all counts.
And that feels very true.
This data is showing that they're number 2 across the U.S. in migration over the last year, preceded by the Dallas-Fort Worth area, and then Texas, San Antonio, number 3. But it's really clear when you look at this. This is kind of a scattered graph, so to speak, because you can see where the growth is. It's here we have Phoenix and Vegas in the Southwest, and then it's really in the South. Seattle's kind of the one outlier over the last year, and that's really an employment driver. But look, when you're looking to invest, it's pretty clear where that growth is going.
Yeah.
And that's something I think we're always looking at, right? Especially you and John are looking forward 10 years or more on what the trends are showing, what the growth. Yeah. So I think that's an important thing.
And we've seen so many people are moving to these areas to work. And as more people move here and migrate to these states in the South, those states in the South are just going to add to the national GDP.
Well, here especially, I think we have that perfect combination of incredible job growth. We have this high in-migration with people bringing also higher salaries, which is amazing. And then we are relatively tax-friendly. So all these things together, good thing we're number 2. I think we're going to be number 1. This just makes me competitive.
And you point out something that's critical, is that this isn't just about now that there's more people living there. It's about that they're coming here for great jobs. People who are coming here have high wages, and they're going to spend money in that area. And that creates a momentum in that area when it comes to housing, when it comes to economic activity. And that's why, these states get a lot of criticism for giving big tax breaks to folks like Amazon, if Amazon will come there, or Tesla, and Texas gave Tesla a big tax break. So they moved out of California. Now they're headquartered in Texas. A lot of criticism, but you can't argue with the momentum that comes when these events happen.
Well, I've just been so amazed. I think over the last year, the number of big businesses moving to Arizona, and they just seem to follow each other. We've talked about a number of them, but they just keep coming.
Yeah.
And it only helps us. It's better jobs, more diverse.
So we know that migration is something that's happening. Now let's dig into some specific things we're seeing with multifamily.
Yep.
We know that there is a lot happening with housing right now. It's in the headlines a lot because even though interest rates have gone way up over the last year, housing is still, there is not enough supply to meet the demand. And this specific article in Globus.com focuses on multifamily, and we just want to point out a couple things. So this is from May. And as you can see here in the article, that in May, the average time a rental unit sat empty fell to 26 days, which is the shortest since August of 2022. And in addition to that, new lease applications per unit increased over the last 2 months, and the velocity of lease renewals per unit also grew. So we're looking at those data points to determine, okay, is multifamily something where there is enough supply to meet that demand, or is it still short in supply? And when you see things like this, it indicates that the supply still is down and not enough for the demand.
Yeah, as an investor, if you're looking at investing in any type of real estate, reading articles like this, it's very helpful for you to decide that, multifamily right now is probably the best choice to put your money and the safest choice. The prices of homes are continuing to skyrocket and go up, and people are still choosing multifamily and renting over purchasing a new home.
And that's what I think, there's two very important pieces. Not only do people need to rent because there is not a housing supply, and all the things we see in the housing market right now, but they want to. The trends that they're skewing that way anyway, as these people are going into the housing market that both need and want. And then I think multifamily is really kind of meeting that need in interesting ways. And we need more multifamily. That it just, like it says, it continues to climb, and we are in a housing deficit.
So Barbara wrote this article on July 5th, and then yesterday, a new article came out that she wrote, and this just came out, like I said yesterday, net demand for apartments reaches 5-quarter high. I'm just going to read a little bit from the article. There's already a peak of completed apartments representing a 50-year high, but at the end of the second quarter of 2023, 107 units were finished and ready to lease. This level of units is expected to continue through 2024 and then ease in 2025. So we are seeing an increase in completed apartments due to this backlog of apartment buildings that were supposed to be built several years ago that are now finally getting finished. But as we often talk about with supply and demand, they have to meet in the middle at price. And so even though there's an increase in the supply, the demand is meeting that, and it's barely keeping up with the demand that's required. And we now see that the demand has reached the highest that it's been in over a year.
Jamison, what would be your biggest takeaway for us, Neighborhood Ventures, knowing this information?
We're looking for stories in the data. So as we look at this data, you have to say, what does this mean, not only today, but in the future? And the other important thing is, even though there is some supply of apartments getting finished right now that were started years ago, there isn't much coming online that's going to be coming on in late 2024 and late 2025 because interest rates are so high. So a lot of those new apartment deals didn't make sense for people. So they're saying, we're not going to build with 7% interest rates. We were fine with 3 and 4. We'll build all day, but at 7, it changes the game. So even though there's going to be additional units coming out over the next 18 months, as we get through this next 18 months, there's going to be another drop off of supply because new deals are not starting like they were before.
That was a good question. We can pretend I asked it.
And then we reference this, but this is just another important thing to remember, is that higher wage households are now renting as home prices continue to go up. So this is the report from Marcus and Millichap in May, and they're seeing a trend that we've talked a little bit about before, but what's happened is renting is the new buying. So when you're getting relocated to a new area, or you're looking to move the family, it used to be this big thing, well, we got to go buy something, we got to be on Zillow, we got to drive it, fly out there and start looking at homes with a real estate agent. Now people are doing that with apartment buildings. They're looking at different apartment buildings with the same amount of care that they used to look at buying a home, because they want the apartment building to have the amenities that they want, and because they have the cash to spend on that rent, because they're not going out and buying a home.
My dad's a good example of someone, he makes a decent amount of money, and he moved from city to city quite a bit, and he doesn't buy anymore, he rents. And that's, he was the classic American dream home buyer. And now he just goes online. He loves doing the virtual tours, and he finds, before he goes to the city that he's going to move to, he finds the apartment that he likes and he moves into that one.
He's so Gen Z. I like him. Look at that. He's
I'll
been
have to
converted.
show him
Now,
this,
if he's Gen Z and Bart's a millennial, I don't know how that works, but
It's a spirit. It's your spirit.
Spirit.
It has nothing to do with age. It's all about your spirit. Yeah.
Yeah, and it is a Gen Z thing, but it's creeping into the other generations, and the other big one are baby boomers.
Yes.
If they want to sell, now's a good time to sell. They can get a lot of cash out, and then they can move into a nice multifamily apartment and be very happy. there because those amenities now have increased.
Right.
Yep.
They don't have a lawn they have to take care of. They get to enjoy their life. Their little gyms right there. They're happy. Yeah.
Well, and that's what happens is as more people who have higher disposable income for their house, as they decide to rent, then the quality of rentals go up correspondingly. The quality of the amenities, the finishes in the units. That's why when we can go find a building that has below market rents, renovate it and put new amenities in, they lease up real quick. And that's because the rental pool is changing.
You know, the one thing I love about these kind of articles is when we're talking to new investors, we're really trying to talk about how real estate is it's a long-term mindset that it's not a get rich quick overnight. You really have to think forward. And what is the market going to look like? What's it going to do in the long term? And this information really shows this is the way things are trending, and we feel confident about multifamily. And so I think these are wonderful because it really helps people get in that mindset of this is a good place to put my money.
Yeah, final comment here for me is just piggybacking on what you're saying, Heather, is we're looking at these trends to see what happens over the next 10 or 15 or 20 years, not what happens over the next 6 months. The next 6 months is a game of day trading, and that's not our business. You know, if you want to be a day trader, you can do that. But what real estate is buy right, hold, get the cash flow, hold it, and then sell it when the market is right. And that tends to be a long game. So I couldn't agree with you more when it comes to the mindset that our investors should have. Anybody looking to invest in housing should have. Look, you can make a quick buck sometimes with real estate. There's ways to do that, but you're just as quickly as you make that buck, you can lose it in a down market. Where if you have a long-term view, you buy low, operate, and focus on operating your properties at a high level, and then sell when the market's right, you will do very well over time.